Welcome to Get Real with Eddie, the show that dives into local, regional, and national real estate, the largest creator of millionaires, and the key to building generational wealth. Hosted by Eddie Ruettiger, designated managing broker of Exit Real Estate Specialists. Eddie is here to share expert insights and strategies to help you unlock the power of real estate. Now, let's grow in real estate with Eddie Ruettiger.
Nancy, how you doing?
Can I ask a question?
What's the question?
Is it May yet?
No, but it's been brutally. Last week was just nasty.
I do not like it, Sam. I am. Do not like it.
You know my best friend Sam, and he quotes that all the time.
Does he?
Yes, he'll do that all the time, and it's hysterical.
I do not like it.
Sam. I am. You know what? Somebody else doesn't like some stuff. The builders.
Really?
The builder sentiment falls as industry looks for improved builder conditions in 2026.
Well,
I've got a mixed bag on this. So first off, when they start talking, oh, well, builder sentiment. Okay, well, this is all the feelings of the builders and how they feel about the market.
Feelings. Whoa.
Feelings aren't facts. And of course the builders aren't going to be happy. They have been 25 to 30% of the market for the last 5 years.
Yeah.
And now, oh, look, inventory's starting to come up. People are starting to sell their houses, which means they are not going to be 25% of the market anymore. They're going to go back to their little 10% of the market. And they're not going to have as much control in the deal as they did.
Yeah. They might decide they want a realtor to help them as well. Just
home builders might be
saying.
Pessimistic about the new home market today, but they're still holding on to hope that a change in buyer conditions mean more sales this year, according to a national monthly survey by the National Association of Home Builders. By the way, this is Caroline Broderick writing this article on January 16th. This came out for homes.com. The National Association of Home Builders and Wells Fargo Housing Market Index published Friday found home builder sentiment of new home sales dropping deeper into negative territory with a reading of 37, down 2 points from December survey. Any measurement over 50 is regarded as positive. Hold on. Home builders grappled with home seekers' buying power and interest challenged by mortgage rates, rising home prices, economic uncertainty, and new home starts slowed by 7%. Well, new homes slowed by 7% because they decided not to build 7% more housing. It's their choice. They own the land already.
Yeah.
Now, I can understand, yes, they're probably not building as much because it didn't sell as fast. Yes, 2025 did not sell like everybody thought it was going to sell, but it did do better than 2024.
Yes. Agreed.
Sentiment has not been positive since 2024. Highest reading in 2025 was 47 in January. But y'all did fine. I think I'm feeling a little bitter towards builders right now.
I can tell you're...
I don't know why. Maybe I didn't get enough caffeine this morning.
What?
I need to maybe drink that chocolate junk you drink.
Chocolate junk?
What's it called?
What? Chocolate junk?
I don't know. What's the stuff you drink in the morning?
Coffee?
Oh, that disgusting stuff.
I love me some coffee.
Gag me.
So wonderful.
Anyways, where was I?
Anyway, back to builders. For some unknown reason, you are a little.
I'm a little fired up this morning. Yeah,
a little fired up against the builders.
Home builders' perspective on new home sales for 6 months paints a different picture. Portion of the index has posted significantly higher. The sale. Well, I jumped. Hold on a second. The portion of the index that has posted significantly higher continuously. Currently, sale condition segment dropped 1 point to 41, while the gauge of prospective buyer traffic dropped 3 points to 23. Okay, I can understand the traffic drop. All right.
Yeah.
All right, let's get into the quotes. Josh McGowan, Vice President of Sales and Marketing for Michigan-based builder Eastbrook Homes. Eastbrook's not really in our market. High hopes. I actually think the spring market is going to do well. I truly think it'll start to open up. I think the rates will help, and people are going to realize that buying now is a good idea. All right, there we go.
Again, the rates.
The National Association of Realtors Chief Economist Lawrence Yoon has predicted new home sales will increase. The average 30-year fixed mortgage rate on January 15th dropped to its lowest level. We're going to get into that. Builders continue to cut home prices. This is okay. So I'm gonna come off my soapbox, and this is why this is where it's at. In our market, our builders are not facing the same aspects. Nationally, they've had to cut prices. Nationally, they have been struggling. Our market, our builders are just
rocking it.
They're rocking it. They're rocking it, and that's the truth. So the survey that they did found 40% of builders cut prices in January, the third consecutive month. The share has been at the level or higher. So 40% of builders are cutting prices. Builders cut prices at an average of 6%, but even more opt to offer deals such as mortgage rate buydowns, free upgrades, or funds to buyers to use as they wish. So that has been happening in our marketplace. Yes. We haven't seen the price cuts, but we are seeing them having to do the buy downs, and they are offering, here, you can use this funds. Do you want to use it for down payment? Do you want to use it for rate buy down? Do you want to use it for whatever?
Right.
However you want to use these funds. So yes, that has been happening. So future sales component of the NAHB index dipped below 50 for the first time since September, indicating that builders continue to face several issues that include labor and a lot shortages, as well as elevated regulated material costs. All true factors even in our market, especially the labor. All right, so maybe I need to not pick on builders so much. Maybe I need more caffeine in the morning.
Maybe you need to start drinking coffee.
No, stunts your growth. You don't want coffee.
It's perfectly fine.
No, it's gross. I don't know how you guys drink it.
I don't know how you don't drink it.
Do you really want to see me on anything that's going to make me more crazy and jumping and more hyper? Let's be honest here.
You know what? They give.
I mean, there's people that have lined up
stimulants to counteract that H and the ADD.
Yes, I'm just saying, but do you really want me stimulated more? Have you met me? There are people that have offered me money to see me do the opposite and do that little grassy thing. I mean, I'm just saying, because I've never done that either.
That I might pay money to see.
There's a lot. Get in line. There's a long line for that, let me tell you.
Let me know, because that I'd kind of take a peek at.
So mortgage demand, totally just walking away.
Sorry.
Mortgage demand soared almost 30% as rates fell. is it Maria? How would you say by Maria Ritter?
Yes,
Maria? Okay, that's a
Maria.
all right. Written on January 14th. Buyers were quickly to take advantage of last week's mortgage rates as they hit their lowest level in years. Mortgage demand climbed 28.5% in week ending of January 9th, according to the latest reading in the Mortgage Bankers Association. That surge came as daily mortgage rates briefly dipped beneath 6% threshold for the first time.
Yeah, they have been doing some dipping.
Did you hear what I said, Nancy? Rates dipped beneath 6%.
Yes. I told you my goal when you really start seeing things happen, that it's going to be 5.5. That will be a significant enough reduction.
And considering most people are at 3,
Right. That's what I'm saying.
to move at a 2.5% increase to my rate, but I'm taking all of this equity over.
You
So-
could actually,
My monthly payment would be less than
yes. And that's really what the deciding factor is.
it doesn't matter that I have a $400,000 house and I'm buying a $500,000 house or a $600,000 house. The matter comes into play as I'm spending on this house $1,500 a week and then our month, and the next house I could be spending $1,300 a month.
Correct.
So I completely agree with you, and I think you may be right, because that would be an interesting number experiment. Let's actually do that. All right, let's say, hold on, because I'm right here. Let's say you're selling the house for $365,
Okay.
and you're going to buy a house for $525. I think
Okay.
that's reasonable in a market.
That's reasonable.
Okay. And let's say, what would you say on a 365 house? What are you walking away with to put down on the next house?
Depends on which mortgage is.
And well, of course, but we got to come up with some hypothetical numbers. I'm going to
Okay.
say they're walking away with 200,000.
Okay.
All right.
After they've paid off their mortgage and paid
all-
fees, tax, title, license out the door.
Yes, exactly. It's not a car, but yes, you're right on the same thing.
Yeah.
And if you're at 5.5%, that's what you're saying. All right. So you're looking at, I'm not going to get into taxes. I'm not going to get into that, but you calculate that out. Your principal and interest is 1845, roughly.
Mm-hmm.
Okay. At 5.5. All right. Where if you were, let's say, back at that 365 house, and let's say you bought that house 20% down. Okay? You did have 20% down, or let's actually, you just refied it with 20% down, whatever it was. Okay? So you refied that with 20% down, but you had a 3% interest rate on that one. When you calculate that out, we're at 1845 on the more expensive house. 20% down would be 1230. So you're going up $500 a month, but you're also getting the house you want on principal and interest
Okay.
at a 3% rate, because the monthly principal and interest is $1231. So you're going up about $500. Is it $500? Yeah, probably close to 5, maybe 5.5. But you're also probably talking that person's got 15 years in that last house at 365, and their monthly income probably has increased more than $500 a month. You know what I'm saying? So they probably can swing it. I think you could have people having more than that.
But I think that just goes to show the point that once the interest rates do come down, it's going to help to make it more affordable to make that jump.
Refinance applications climbed 40% compared to the previous week, and 128% compared to the same week a year earlier. That's
Point.
key.
Point.
What?
My point.
Yes, that's key. So we're looking at this from the aspects of the people that have been in the house for 20 or 30 years. Maybe not that long, 10 or
Well,
15.
but that's going to be your seller. That's going to bring in the inventory.
But the refinance aspect, think about the capital on your monthly budget for these people that bought in the last 2 or 3 years that are at the 7 and 8%,
yeah.
and now they're refinancing for a 5.
5.5.
That's huge.
That's big.
That's huge. Purchase applications saw a 51% week over week increase, and they were up from 13%.
Yes, the lenders are going to be very happy. And the homeowners that recently purchased at that 8% are going to be super happy.
The 15-year fixed rate mortgage declined, and it's averaging 5.38. This was as of January 15th when the article was written. All right, this is same author, Maria Ritter. She wrote a different article on the mortgage demand. Mortgage rates sink to the lowest in average in 3 years to 6.6.
And if you are one of these people who are looking to refi, be very careful about fees to refi. Don't just necessarily refi with the company you're currently with.
Yeah. You need to
Just be very careful about
call
that.
around, get an understanding of what the costs are, and compare apples to apples. Honestly.
Yeah. Just do your homework. But yeah, these people that are going to refi, so good for them.
I just the increase in demand, because here's the other aspect we still haven't really addressed. We have a huge, I want to say, I'm going to go as far as 30 to 40% of buyer remorse from 2020 to 2022.
I think that's pretty high.
You think it's high?
Buyer remorse. Yeah.
I don't think it's high. I think there's that many buyers that went out and bought a house when those rates were so low, and they now hate their house. They hate their house.
I think there are those that bought because they got tied up. They were out looking. They got caught up in the whole, we need to put in an offer. We got to put it in right now. They got the house. And now they're like, oh, we didn't think it through as well as maybe we should have.
Yes, there is. And I think it's about 30% of the market.
Ooh, I'd like to see a number on that.
I don't think there is a data number. I mean, we could check. So let me do a.
I mean, it was a thing for a while. I mean, I remember talking about it, but 30%, that's really high.
I think you're looking at it from your aspect, from your clientele, and that's why you don't think it's that high.
No, I'm just thinking in general, that seems rather high.
I don't think so.
I don't know.
Let's see if we can pull any data. Hold on a second. A Lending Tree survey found about 80 to 83% of buyers in the past 2 years said they don't regret their home purchase. So that was for this 20 to 2022. So it's at least 18 to 20%.
17%.
Yeah, 17 to 20%.
To 20%.
All
Okay.
right, so maybe I am a little high.
I was going to say, you're a little bit high.
Another survey found nearly 3/4 of home buyers surveyed had at least one regret related to their purchase, such as compromising on a feature or paying. So one regret doesn't mean they regret the whole house.
Right.
or hate their house.
And don't you find, I mean,
I think you always do.
You always do.
Yeah, that
That's
aspect,
normal.
you always find something that you don't
Oh, man,
like.
I wish I would have realized it had whatever.
So, summation, 20 to 30%, from what the data that we just pulled, 20 to 30% often regret. Some have some regret. Okay? Buyers in the past 2 years, minor regret, up to 40 expressed one regret. 50%, first-time buyers have 50 to 70% of that. So that's a high number. First-time buyers, and this has nothing to do with the time frame, often higher.
More financial pressure and compromise. Often, depending on study. Have more than one regret or totally regret buying a home. That's what they don't talk about.
Yeah, see,
Majority
that's
of
the thing.
buyers overall. So they don't really say. If it's more first-time buyers that have any regrets, that would make sense because they've never purchased a home before. You know, but when you know better, you do better.
I had some regrets.
Yeah, see, this is...
Yeah, everybody's still some regrets. So, I mean, the regrets are there. It's possible. But I don't know. I've seen some articles and some stuff that says that...
Well, that's what I want to...
You got some... There's some people out there that I don't
regretted making the move. Yes.
Yeah.
There's no doubt. It's just, I don't know that it's as high. 30%. That's pretty high.
There was...
That's pretty
I think
high.
it's calmed down. But I remember in 2023 and 2024... seeing some articles how people hate their house, and now you don't. I think because they learned to live with it, I think that has calmed down. But I do think you're going to see people that are going to go and make a move, and because they don't like the house. I do see that coming. I see that as a bigger trend than all these people waiting for the next year or two if these rates dip down. I could see those people that bought between 2020 and 2023 selling faster on a percentage basis than what sold, or what everybody's waiting for these boomers to sell their house. Because they're still waiting for boomers to sell their house.
I was going to say, and they'll continue to wait for boomers to sell their house because there is no tsunami of boomers.
There's no tsunami of boomers. It is the most ridiculous thing I've ever seen or heard. Is, oh, there's going to be a tsunami of... No, there's not. They're going to sell when they're ready to sell, just like any other market.
Yep.
And they're going to just slowly trickle in and slowly trickle in.
That's right.
Because it all comes down to one factor, in my opinion. How is their health?
Exactly. It's all about health.
If they are in good health, they're staying in their house.
Yeah, because we're social and enjoy our homes more, longer than ever. People love their homes.
Yeah, exactly.
So,
All right, let's hit a break. When we get back, big investors, are they really buying up houses? We're going to talk about it. Keep it here. Get Real with Eddie.
Are you a real estate agent ready to take your career to the next level? Tired of feeling like just another number in the office? It's time to join a brokerage that's invested in you. Exit Real Estate Specialist. At Exit, we don't just offer a desk, we offer growth, mentorship, and the tools you need to build lasting success. Led by Eddie Ruettiger, designated managing broker, we focus on helping agents create generational wealth, not just close deals. Imagine having the support of cutting-edge technology, top-tier training, and a culture where your success is celebrated. Plus, with Exit's unique residual income opportunities, you're not just earning commissions, you're building your future. Ready to grow? Ready to thrive? Join Exit Real Estate Specialists today. Call Eddie Ruettiger directly at 815-823-5478 or visit www.exitrealestatespecialist.com to learn more. Your future in real estate starts here.
Welcome to the Lions Club. Being a lion means knowing that kindness matters. We believe in changing the world by serving the needs of our local communities. More than 1.4 million lions around the world are responding to local and global challenges with kindness and care. Come volunteer with us. Your Lions journey starts here. The Crest Hill Lions Club invites you to reach out to your local Lions Club to learn about how you can be a part of a community and bringing passionate, kind-hearted people together to serve local needs. They build relationships that lead to opportunities. In short, when lions serve, life improves, and the community grows. Grow with us. The Crest Hill Lions Club would also like to thank our sponsors who help with our yearly events, such as the car show and picnic at St. Joe's Park, and those who attend and support our Easter egg hunts, Shanahan Bingo, and many more events. The Crest Hill Lions Club meets the first and third Thursdays at 6:30 p.m. For more information on being a lion, go to lionsclub.org to start your journey today. That's lionsclub.org.
It's Eddie Ruettiger from Exit Real Estate Specialists.
And Get Real with Eddie. I want to bring to your attention the Herbert Trackman Planetarium at Joliet Junior College. My son loves this. They offer free shows on Tuesdays and Thursdays at 6 p.m. It's perfect for stargazers. The show provides excellent astronomical instruction and entertainment for no charge. That's right, it is free on Tuesdays and Thursdays at 6 p.m. The planetarium features a 30-foot diameter dome, a new OmniStar digital planetarium projector. During the shows, you can enjoy sky tours using the projector and PowerPoint presentations covering a wide range of astronomical topics. For more information, please visit jjc.edu/planetarium. And for you educators out there, they are open for field trip bookings. So go to jjc.edu/planetarium.
Thinking about selling your home? Don't just list it, leverage it with Eddie Ruettiger, designated managing broker of Exit Real Estate Specialists. Eddie puts powerful marketing strategy behind every sale, featuring professional photography, detailed floor plans, immersive 3D virtual tours, and dynamic video walkthroughs that make your home stand out. With targeting online campaigns, social media exposure, and proven strategies, Eddie attracts serious buyers to get your home sold fast and for top dollar. Plus, you'll always be in the loop with clear, constant communication. Ready to sell with confidence? Call Eddie Ruettiger at 815-823-5478. That's 815-823-5478. Or visit yourdwellings.com. Eddie Ruettiger, Strategic Marketing. Stand out results. 815-823-5478. Or visit yourdwellings.com today.
You made a smart move to get real with Eddie, helping you make your next smart move into your next home.
All right, so even the president's chimed in on this. Are big investors really buying up all the inventory? And, we'll see. Big investors are buying up all the homes is a claim that's out there. I don't think that's actually true.
I was going to say, I'm not thinking that's the case.
Now, in some cases, in some communities, I have heard that these Wall Street investors have come into owning 20 or 30% of a market.
In certain markets.
In very specific markets. But I don't know I've heard rumors of this. I haven't seen data or anything to support that. And yes, in my opinion, I don't think anybody should own more than, 10% of a market. I don't even know if they should own more than 5%. If you own more than 5% of a stock in the stock market, you have to fill out a form and declare it. So if I bought 5% of Amazon, once I own 5% of Amazon, I got to fill out a form and say, hey, I own 5% of Amazon. I think it should be the same way with real estate.
I think it should be the same way with a lot of things.
I mean, if you own more than
all these conglomerates that eat one another.
But that's not happening here.
Yeah.
That's not happening here. So, at least not from my point of view. All right. If you're a home buyer who's lost on a few offers, the idea probably sounds believable. Where homes are expensive and competition is tight, it is easy to assume giant companies are scooping everything up behind the scenes. But here's the thing. What people assume is happening and what the data actually shows aren't always the same.
Truth. Well, and there was a time period there where there were so many cash deals that I understand why people would assume that, because there was so much
A lot of people
cash floating around there.
Yep, a lot of people had cash in hand, so they were.
Yep. But they just sold their house. They had cash.
And the funny thing is a lot of the investor deals I get coming in front of me, they're not cash deals. They're not. They're financing it.
Yeah.
Because they don't want to put their cash at risk.
No.
So, the most important stat, according to John Burns Research and Consulting, JBREC, large institutional investors, those who own 100 or more homes, make up just 1.2% of the purchases in 2025. 1.2%. And that's down from the high of 3.1%, which was in, looks like 2022-ish. So they're buying 1.2% of all of the homes.
Yeah, that's not a whole big deal. I imagine it is if you're in a community where that's the case.
Yes.
But
one out of every home sold went to a large institutional investor, 1 out of every 100. Why are they getting so much attention? Investors actively spread evenly. Investors are more active in certain markets, which can make competition feel intense for home buyers in those areas. Lance Lambert, co-founder of Reese Club, explains, on a national level, large investors, those owning at least 100 single-family homes, only own around 1% of the single-family home stock. That said, in a single handful of regional housing markets, institutional and large single-family landlords have a much larger percentage. All right? That's what I've heard also, and I'm right there with you. Part of what makes the... Jumped again. Helps if I hit the right button when I'm trying to scroll. Part of what makes the share of purchases bought by the investors sound so big is because headlines lump large Wall Street institutions with smaller local investors like your neighbor who owns 1 or 2 rental homes. And that's kind of true too.
yeah.
You know, and we need these people. House gets destroyed. It's in foreclosure. These are usually the buyers that come in, buy them up, clean them up, resell them,
Yep.
or rent them out. And we need both.
Yes. And you don't want a property just being empty and sitting there deteriorating. You need these people to come in and rehab these homes.
Big investors do exist. Yes, they buy homes, but nationally they are responsible for a very small share of the total purchase. Smaller homes are for smaller, homes. Most people are fighting against. You're not fighting even against investors. You're fighting against the other individuals. Because I'm going to go back out there and say, you know what, your investor market is probably making up, 20 or 30% of the purchase market, but that's 20 or 30% of the purchase market when you're probably $100,000 under your median sales price. Maybe a $200,000. It depends on your market. You got to look at what your market median sales price is. They're not buying. So,
Right.
if your market price is $350, you're not competing against an investor. Investors are not coming in and buying them at $350.
Nope.
They're coming in and looking for the house that's trashed that they can get for 20% or 30% under market that doesn't need a lot. They're looking to come in and buy the house, put whatever amount they put into it. They want to be able to turn around and say that they've got 20 or 30% equity in that house. Well, probably 10% equity. If we're like, I'm 20 or 30,000 in dollars.
Yeah.
You're 20 or 30 grand equity. And then they're going to rent it, or they're going to sell it, or they're going to whatever. So if you're getting into multiple offers,
chances are it's not a investor.
You're not dealing with an investor unless you're dealing with property under market value. What's the median sales price of that market?
Yep.
Okay? If you're within 10% of that median sales price, you're might be, could be, but probably not.
Yeah. It doesn't make sense for the investor to come in and buy that. They're there to make money. That's the point.
Yeah, that's exactly the point. So they're coming in and they're figuring, okay, I have to do $50,000, $60,000 in repairs.
Mm-hmm.
I want another $20,000 or $30,000 profit. All right.
Yeah.
I then got to, if they're looking for a resell, they're looking at, okay, I'm going to figure 10% to sell it.
Mm-hmm.
So on a $200,000 listing for our market, because that would be probably below median sales for most of our area.
Mm-hmm.
All right. Now I'm at 200, 250 for the repairs. All right. Now I'm at 280 plus another 10. I want to sell that a $200,000 house for 300 grand.
Yeah.
If I'm renting, 9 times out of 10, they want 10%. So that means if I am renting the house out I've got 280,000 into it, all right, times that by, your 10%. Now you got to divide that by 12. They're looking at, can I rent this out for $233? That's what they're looking for. Maybe, probably. $233 is not a bad price on rentals.
$23.33.
All right, yeah, $23.33. I'm sorry.
Yeah. $233 is definitely not a bad
$233
price.
is not a bad price. $2,330, probably $2,335 is what they're going to rent it out for.
Yeah.
And they'll probably actually truncate it. They're either going to go by power of 25 or 50. So they're going to rent it out for $2,325 or $2,350.
Mm-hmm.
Can they get that in the marketplace? That's their deciding factor with on how these work.
Yeah. Yep.
So big investors, yeah, I'm not, like I said, I have heard, I think it was Phoenix, that it might have been BlackRock. And that's the other thing. I know I heard BlackRock, I think it was BlackRock has 60,000 residential homes that they own.
Okay.
Do you know out of BlackRock's portfolio, how much that makes out of their portfolio?
I have no idea.
It was like 6%, I heard.
Oh, I couldn't tell you.
So it's not even their largest asset or largest thing that they're looking at. Yes, okay, hey, we're making money here. But
they've diversified their assets.
Yes.
Okay, that's what you should be doing.
Yes, and the president to come in and say, hey, we're going to turn around and not allow these individuals to buy housing. Okay, I don't necessarily agree with that. I can understand if, hey, look, they have 20% of this market. I don't think that's fair.
And that's where I think local,
yes,
you can work on that on the local level.
I don't know if they can regulate that legally at the local. That might be a power that's delegated to the federal government, maybe the state, but because it's a commerce issue. Probably the state could do that, but I don't think a city could come in and say, no, we are not going to, you can't have more than, and I think it should be. They shouldn't be able to own more than, 1% or 3% of a market. It depends on the market. I'd have to sit down and run data and look at that.
Yeah.
It'd be interesting. You figure what? There's, I think, 50,000 single family homes in Joliet. So, 1% of that, you're looking at 500 houses. So if you owned 1,000, you own 2% of the market. I don't think owning 1,000 houses in a $50,000 range. Now you get down into micro aspects. Okay, what if you owned a third of a neighborhood in Joliet? Well, if you tank it, you're going to tank your own value anyways. If you try to dump everything and sell everything off, you're going to hurt yourself as much as you're hurting those around you too.
Yeah. Well, and so a thing was 2-3 years ago.
Can you hold that thought? We're over.
I'll hold it.
All right. We're going to talk about the thing 2 or 3 years ago when we get back after the break. Keep it here with Get Real with Eddie.
Are you a real estate agent ready to take your career to the next level? Tired of feeling like just another number in the office? It's time to join a brokerage that's invested in you. Exit Real Estate Specialist. At Exit, we don't just offer a desk, we offer growth, mentorship, and the tools you need to build lasting success. Led by Eddie Ruettiger, designated managing broker, we focus on helping agents create generational wealth, not just close deals. Imagine having the support of cutting-edge technology, top-tier training, and a culture where your success is celebrated. Plus, with Exit's unique residual income opportunities, you're not just earning commissions, you're building your future. Ready to grow? Ready to thrive? Join Exit Real Estate Specialist today. Call Eddie Ruettiger directly at 815-823-5478 or visit www.exitrealestatespecialist.com to learn more. Your future in real estate starts here.
Welcome to the Lions Club. Being a lion means knowing that kindness matters. We believe in changing the world by serving the needs of our local communities. More than 1.4 million lions around the world are responding to local and global challenges with kindness and care. Come volunteer with us. Your Lions journey starts here. The Crest Hill Lions Club invites you to reach out to your local Lions Club to learn about how you can be a part of a community and bringing passionate, kind-hearted people together to serve local needs. They build relationships that lead to opportunities. In short, when lions serve, life improves, and the community grows. Grow with us. The Crest Hill Lions Club would also like to thank our sponsors who help with our yearly events, such as the car show and picnic at St. Joe's Park, and those who attend and support our Easter egg hunts, Shanahan Bingo, and many more events. The Crest Hill Lions Club meets the first and third Thursdays at 6:30 p.m. For more information on being a lion, go to lionsclub.org to start your journey today. That's lionsclub.org.
It's Eddie Ruettiger from Exit Real Estate Specialists.
And Get Real with Eddie. I want to bring to your attention the Herbert Trackman Planetarium at Joliet Junior College. My son loves this. They offer free shows on Tuesdays and Thursdays at 6 p.m. It's perfect for stargazers. The show provides excellent astronomical instruction and entertainment for no charge. That's right, it is free on Tuesdays and Thursdays at 6 p.m. The planetarium features a 30-foot diameter dome, a new OmniStar digital planetarium projector. During the shows, you can enjoy sky tours using the projector and PowerPoint presentations covering a wide range of astronomical topics. For more information, please visit jjc.edu/planetarium. And for you educators out there, they are open for field trip bookings. So go to jjc.edu/planetarium.
Thinking about selling your home? Don't just list it, leverage it with Eddie Ruettiger, designated managing broker of Exit Real Estate Specialists. Eddie puts powerful marketing strategy behind every sale, featuring professional photography, detailed floor plans, immersive 3D virtual tours, and dynamic video walkthroughs that make your home stand out. With targeting online campaigns, social media exposure, and proven strategies, Eddie attracts serious buyers to get your home sold fast and for top dollar. Plus, you'll always be in the loop with clear, constant communication. Ready to sell with confidence? Call Eddie Ruettiger at 815-823-5478. That's 815-823-5478 or visit yourdwellings.com. Eddie Ruettiger, Strategic Marketing. Stand out results. 815-823-5478 or visit yourdwellings.com today.
Doing everything for you except the moving. And be glad. It's Get Real with Eddie.
All right, we are back.
Talking about investment companies.
This is for
investing
2 or 3 years ago.
So about 2 or 3 years ago,
Okay.
there was a lot of purchasing and some exploration in companies coming in and working with developers, and the developer would build the community and these companies would just buy the community.
Buy the whole neighborhood.
Yes. And then use them as rentals. Idea being that Gen Zers want to rent. They want to have the home
Yeah.
and the things that are nice about a home, but they don't want to take care of it,
The
so they'd
ownership.
rather rent. Yeah.
And they'd rather rent. And you know what? I don't see what's the difference if you buy it in a single family product and have 100 units, or if I bought a 100-unit building or had a complex that had 6 buildings with a total of 100 units. I mean, honestly, I'm fine with that.
So, but that's my thing. It's like, okay, they're coming in these communities and there was research, they're serving a need.
Yes. Yes.
Is that a bad thing to come in and just buy up that neighborhood and use them as rentals?
I don't think so. You've got it's a business model, it's a business plan, and no one is forcing them to go rent from them either. You
Right.
have the choice.
Right.
Now I could make the argument, no, we don't have a choice because we don't have enough rentals in that market, and I got no choice but to go rent from that person. So I can see the battle argument there. But I don't know, because I think there's supply will always address demand. All right. If the demand is there for a product, they're going to find a way to supply it because they want to make money.
Right.
And it's the same thing as the mousetrap. All right. Yes, I need a mousetrap. Okay. Well, you look at it, there's 4 or 5 different kinds of mousetraps on the market. Mm-hmm. You could always build a better mousetrap, a different mousetrap, a cheaper mousetrap that gets all of that done. It just depends on what the consumer wants. And that's the need you're looking at is, okay, I want a humane mousetrap. I don't want to kill the mouse. All right. I want a single family house. I don't want to own it though. I'd rather just rent it and let somebody else be responsible for all the maintenance.
Right.
I get it. I understand it. And those neighborhood buyouts where they came in and bought, there was only one of them that was, from what I read, I think there was only one neighborhood where they came in and they just bought the neighborhood. We're going to buy them all. We want the whole thing. Where the rest of them, where the neighborhoods were developed, they went in saying, no, we're going to develop these and build these for rental. We have an investor. We have somebody who wants us to build this.
That's what I'm saying.
Yes.
They were partnering with
Yes.
developers.
Yes. I mean, and we've seen that in our own aspects on Weber Road in Romeoville.
Mm-hmm.
There's some really nice rental property that is up behind the McDonald's that they're kind of townhousey-esque.
Mm-hmm.
I really haven't looked at them much because, I don't deal with that kind of rental property very often. So, but they fill the need. They've got rental buildings also on Weber Road that's filling a need. These luxury rentals, there's just a demand for it.
Yeah. Yes, very much so. So you build them and they will come. There's the demand. It's going to get filled.
And right now, I think people forget home ownership is only about 63 to 64% of the country.
Mm-hmm.
Do I want to see that higher? Of course I want to see that higher. Absolutely I want to see that higher. But
yeah, that's where generational wealth comes in and helps people to stabilize their lives and for generations. So yeah, absolutely.
I completely agree with you. That's why I want to see it. But not everyone wants to be a homeowner. Some people are on a short-term basis in a community.
Yeah.
It's not cost effective for them to be a homeowner. Some people aren't responsible enough
Right.
to be a homeowner.
They just don't want the responsibility.
Some people don't have the cash flow to keep up with the maintenance.
Mm-hmm.
And I get it. Well, yeah, but the maintenance is built into the rent. I understand that. But there is a fiscal responsibility you need to have. And until you have that, you shouldn't own. If you can't put money away every month, in case the furnace goes down, in case this happens, in case that happens.
Yeah. There's a lot of in case.
Home ownership it's housing is an important need. All right? But home ownership is not the need. Housing is the need.
Housing is a need. Yes.
And whether we're housing people via rental or homeowners, we need the investors. We need everybody, on board. All right. And that's one of the other aspects. You see a lot of people that, well, I don't want a rental in my backyard, but you don't want these rentals all in a community either. So which is it?
Yeah.
Because most people coming out of college are not going to be able to go off and buy your house next door to you.
Right.
Especially if you're in an established neighborhood. And the median sales price is above what the starting pay is. Take your income and multiply it by 3,
and
folks.
not even starting pay, but some of these communities are doing themselves such a disfavor because they don't have starter or entry level or mid-range housing in them, so that anybody can come in, whether they're first time right out of college, or let's say they're a senior, or let's say they're
absolutely right. You're absolutely right. So they're getting
ambulance driver.
They're getting out of college. They've got a good job, but they can't afford to move in the town they grew up in. So they're buying in the town next to them because they can afford that. And then by the time they lay down roots and their kids are going to school and everything's going, now they can afford to move back into the town that they grew up in, but they're not going to.
Right.
Because guess what? Their kids are already going to school in this town. They've got new roots.
Yeah.
And that's how you find towns that start aging out and they start losing value.
Yeah.
It happens.
It's kills a community.
Yeah.
You have to have a very variable housing.
Yes. Yes. You need to have a diverse housing stock. And that includes rental property. It includes rental property. But it's definitely going to be a outstanding 2026, I think, and you're going to see a lot of changes coming this year.
Yeah,
So,
I'm pretty excited to see our market and what happens this year.
absolutely. All right, folks, that wraps it up for Get Real with Eddie. Don't forget, check us out online 24 hours a day, 7 days a week at your favorite website, getrealwitheddy.com. And hey, while you're there, don't forget, like, share, and subscribe to our videos and our podcasts. It's all right there. And if you have any questions, you can shoot us a message, as always. So check it out, getrealwitheddy.com, talking about your largest investment, your home.
Thanks for listening to Get Real with Eddie. The views and opinions expressed are those of the host and guests and do not constitute legal, financial, or real estate advice. Listeners should consult appropriate professionals regarding their individual circumstances. Eddie Ruettiger and affiliated parties are not liable for actions taken based on this content. Eddie Ruettiger is the designated managing broker of Exit Real Estate Specialist, Illinois license number 481-014247. Located at 2405 Essington Road, Uden, Joliet, Illinois 60435. Exit Exit Real Estate Specialists is an equal housing opportunity provider. Each Exit office is independently owned and operated. To join an Exit office, call Eddie at 815-823-5478.